Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 23rd, 2025, and we're diving into Intel's third quarter 2025 financial results. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Intel's latest earnings report, which shows some interesting developments in their financial performance and strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Intel reported a net revenue of $13.7 billion for Q3 2025, which is a 3% increase year over year. John, can you elaborate on this growth?
Absolutely. The revenue growth is primarily driven by Intel's client computing group, which saw a 5% increase in the overall demand for their products. Despite some challenges in the data center and AI segment, Intel managed to maintain a positive trajectory in revenue.
And what about profitability? How did Intel perform in terms of earnings per share?
Intel reported a GAAP EPS of 90 cents, a significant improvement from a loss of 3.88 cents in the same quarter last year. On a non-GAAP basis, the EPS was 23 cents, which is a strong performance considering the forecasted EPS was 12 cents by analysts.
Strategic initiatives and collaborations. Intel has been making strategic moves recently. Can you tell us more about their collaborations and investments?
Intel has indeed been active. They announced a collaboration with NVIDIA to develop custom data center and PC products, which is a significant step in integrating AI and accelerated computing platforms. Additionally, NVIDIA and SoftBank have invested $5 billion and $2 billion respectively in Intel, showcasing confidence in Intel's future prospects.
And what about their relationship with the U.S. government?
Intel received $5.7 billion in funding from the U.S. government, which is part of a broader $8.9 billion agreement to expand American technology and manufacturing leadership. This funding enhances Intel's operational flexibility and underscores its critical role in the tech ecosystem.
Operational efficiencies and future outlook. Intel has also made strides in operational efficiencies. What can you tell us about their cost management and future outlook?
Intel has reduced its R&D and MG&A expenses by 20% on a GAAP basis, which has contributed to an improved operating margin of 11.2% on a non-GAAP basis. Looking ahead, Intel forecasts Q4 revenue between $12.8 billion and $13.8 billion, with a non-GAAP EPS of 8 cents, indicating a cautious yet optimistic outlook.
That's promising. How do these efficiencies impact their competitive positioning?
These efficiencies, along with strategic investments and collaborations, position Intel well to capitalize on emerging trends in AI and computing. Their focus on cost management and innovation is likely to enhance their competitive edge in the semiconductor industry.